Hello everyone, hope you guys are doing well. Welcome to another video of my channel where you can expect to learn something new about the field of finance with every video that I post. So today we are going to discuss the hot topic about inflation. महंगाई की मार तो हम लोग सब लोग झेल रहे हैं, but what is the impact of inflation on stock market and your investment, and why is there an impact on stock market due to inflation? All these questions will be answered in today's video. So stick around till the end. So the first thing that we need to understand is the concept of inflation. So inflation is nothing but the rise in prices, which can be translated into decline in the purchasing power for consumers over the period of time. Nothing but महंगाई. So in layman terms, how do you calculate inflation? Well, generally what we track is पेट्रोल कितना महंगा हो गया, सब्जी कितनी महंगी हो गई, या फिर एलपीजी सिलेंडर कितना महंगा हो गया. इसी से हमें पता चल जाता है कि हमारे खर्चे कितने बढ़ गए. So that is nothing but inflation, and it is termed into percentage terms. A very simplistic example would be if you were able to buy 1 kg of onion for 100 rupees last year, but that same 1 kg of onion you are able to buy for 120 rupees now, then there is a 20% inflation on year basis. That is that 20 rupees extra. So if you want to calculate inflation for a particular economy, let's say Indian economy, then it is computed in a very simplistic way. You basically track a basket of goods and services, a pool of goods and services, and you calculate the rise in the price for those goods and services over the years, and you take just the weighted average to compute the inflation for an economy. Same thing that we do in our day-to-day life, that is done in an economy to compute the economy's inflation or a nation's inflation. Now you can ask, इस concept से मेरा क्या फायदा? So let me explain in a very simple term that this is a very day-to-day concept that needs to be taken very seriously. Unfortunately, many people don't understand the importance of this. For example, if your increment for the year is only 7%, while the inflation is 8%, okay, your salary increment was 7%, now the inflation is 8%, then on real terms, you have lost 1%. That is the lifestyle that you maintained last year, you won't be able to maintain that same lifestyle. Although that 7% might look lucrative, or the company or HR might say to you कि बहुत 7% दिया है तुमको, इससे ज़्यादा किसी को नहीं देता है, and all that crap. But if there is an inflation of 8%, then on real terms you are losing money. So always whenever you talk about increment to your HR, always take into account the inflationary factor as well. So, what are the basic two ways of causing inflation? First is demand pull inflation, and second is your cost push inflation. Okay, a demand pull inflation is very simple to understand. When more money chases a limited amount of goods, that is, increase in demand is not met by the increase in supply, then that is called as demand pull inflation. A very simple example for this, everybody would be understanding this, is if there was, during the first wave of COVID, there was a tremendous increase in demand for sanitizers, but the supply was very limited at that time because nobody anticipated such high demand. So because of the increase in demand and lack of supply to the extent of increased demand, the prices of sanitizers shot up like anything. So that was a prime example of demand pull inflation. Now what is the second type of inflation? That is your cost push inflation. Well, cost push inflation can occur if the increase in prices of inputs like labor, raw material, or etc. Happens in the production process, and that is and thereby the increase in price is transferred to the ultimate customers, which is what is happening currently globally due to the rise in oil prices, commodity prices due to Russia war and supply chain issues escalated by the situation in China. Okay, so there are two basic types of inflation: demand pull or cost push inflation. So what is happening in Indian economy? High inflation rate in India has been a predominant feature of Indian economy recently. भारत में कमर तोड़ महंगाई है. शायद आपको ये रियलाइज होता होगा whenever आप पेट्रोल भरने जाते हो, ठीक है, आप आपके दोस्तों से डेफिनेटली बोलता हूँ कि एक टाइम पर मैं इतने इतने का पेट्रोल भरता था, एंड आपके घर वालों को सब्जी में समझ में आता होगा कि कितनी महंगाई बढ़ गई है। सिलेंडर जब खरीदते हैं हमारे घर वाले, तब इजीली समझ में आता है कि कितनी महंगाई बढ़ गई है। सो दिस इज वेरी एविडेंट बिकॉज everybody's way of understanding inflation could be different, but the concept remains the same. आप किसी भी तरह से एनालाइज कर लो, there has been high inflation in India over the recent times, and it has been sustaining for a very long time. This can be clearly seen in the chart over here. Just to give you a perspective, in June 2022, prices of food. So, as I told you previously, for any economy, if you want to understand the inflation, that is computed on a basket of goods and services. So, I'll break it down for you. In June 2022, prices of foods rose by roughly 8%. Particularly, vegetables rose by 17% versus previous year in June. Okay, spices 11%, oil and fat almost more than 9%. But our elected members say in the assembly की महंगाई दिखाई नहीं देती।
आपको पसंद नहीं आई, आप महंगाई ढूंढ रहे हैं, महंगाई ढूंढ रहे हैं, आपको महंगाई मिल ही नहीं रही है क्योंकि महंगाई है ही नहीं।
Everybody knows about the hypocrisy of politics, but the charts don't lie. This data is clear evidence of the fact that there has been sustained long-term inflation in Indian economy. Now that we have understood that there is inflation in the Indian economy, अब आते हैं असल बात पर कि स्टॉक मार्केट पर इसका क्यों और क्या इम्पैक्ट होता है। ठीक है, so have a look at this chart. Although inflation to an optimum level is good for the economy, but sustained inflation at high rate or hyperinflation is going to have an adverse impact on the stock market. That is, there is an inverse relation of stock market versus hyperinflation. If you look at the chart clearly, whenever the inflation goes about 6% and it sustains over there, the blue line, then you can clearly see that the stock market index goes down. Okay? So there is an adverse impact of hyperinflation or sustained inflation, not small amount of inflation, and that is clearly seen in 2020. Obviously, it was impacted by pandemic also, but it can be clearly seen in the recent months also. If you see the chart to the flag end, there is an increase of inflation, sudden increase of inflation due to China lockdown, Russia war situation. So suddenly the stock market has gone down, and hyperinflation or sustained inflation has an adverse effect on the stock market. Now, what is the reason for this? This is because you have to understand in two situations where the inflation is manageable or small, and there is in the second situation where the stock market goes down due to hyperinflation or sustained level of high inflation. So in the first situation where the inflation is manageable, then increase in cost of production can be easily passed on to the consumers like you and me, because during small inflationary trends, there is high amount of money chasing limited amount of goods. So demand is also good in the economy. So in such a situation, small amount of inflation can be easily passed on to the end consumers by increasing the sale price of your product for this companies. Okay? So that is why stock market or the companies, share price of companies that are trading in stock market during normal or manageable inflation, the share price doesn't drop for this company, because they can easily pass on the increasing price to the end consumers. Now, but what happens in hyperinflationary state or sustained long-term inflation? The cost of increase in production for the sudden increase in cost of production or the hyperinflation cannot be easily passed on to end consumers like you and me, because let's say there are two companies, company A whose cost of production has also increased by 15% and B whose cost of production has also increased by 15%. Now, to cope up with this inflation, company A decides to increase the selling price of its product by 15%. Now, what will happen is end consumer like you and me will shift to company B for the same product. So, it is not very easy to pass on the increase in cost of production due to hyperinflation, because the prices of cost of goods or production has increased tremendously, and it cannot be immediately passed on to the end consumer. It is going to be passed on to the end consumers. Ultimately आपको हर महीने को पे करना है ये सब चीजें, but उसके लिए टाइम लगता है. That is, it cannot be passed on to the end consumers immediately, but it will take some time. Till the time the entire industry understands कि boss अब अपन ये increased cost of production bear नहीं कर सकते, and entire industry has increased the cost of production. So at that time the margins are going to improve. But till that time what happens is company have to bite the bullet and take mostly bear the brunt of the increased cost of production. And during that time the margins are going to decrease because they cannot increase the sale price, but their cost of production has increased tremendously. So in such a situation, what happens is the share price of companies fall down. Now, why the share price of the stock market or the companies go down is because their margins are going to be affected, as they cannot increase the sale price, but they are going to bear the brunt of increased cost of production in their cost, and thereby margins are going to go down. And share price is nothing but a function of future earnings of the company. And if future earnings of the company is going to affected or go down, then the share price is obviously going to go down. So hope this is clear why the share price of companies go down or the stock market goes down during hyperinflation or sustained level of inflation. The roller coaster ride of stock market versus the inflation can be understood in three phases. First phase is when there is a sudden increase in inflation, that is hyperinflation happens. Then what happens is that the company are not able to pass on the increase in the cost of production to the end customers, and they have to start booking some losses, and their margins go down. That is why the stock market goes down. This is the first phase. What happens during this first phase is companies start to do some cost-cutting measures or restructuring measures, and they try to optimize their organization so that their margins are able to recover in case the inflationary trends continues. Okay? And since hyperinflation is a non-diversifiable risk, all the industries and all the companies are affected in the same manner. That is why people, whenever there is an increase in inflation, stock market or the big players try to exit the market immediately to avoid any losses. Okay? So this is the first phase where the stock market goes down because of hyperinflation. Because the companies are going to take the hit on their margins, and the margins are going to go down for this companies due to increase in cost of production. Now, what is the second phase? Second phase is when the RBI or central bank of any economy uses the monetary policies to curb this inflation, and an effective way of reducing inflation is by increasing the interest rate or the CRR rate. Because if you effectively take away the money from the market or the money from common people by increasing the interest rate, then the inflationary trend gets into control, because there won't be more amount of money chasing the goods. Okay, this is called as monetary policy by increasing interest rate or CRR rate. But this is again negative for the market, because what happens is when the monetary policy or the central bank decides to increase the interest rates, then the interest rates for the loan also increases. Okay, so if there is a company which is more capital intensive and has taken more debt, then उनका cost भी will be increase होगा, because they will have to pay more interest to the banks, and this affects majority of the sector, because again this is the non-diversifiable risk, and whole companies are going to get affected because of increase in cost of interest payment. Okay, and that is why margins are going to further deteriorate. So in such a situation, if a company has low amount of debt, then that is always recommended, because the cost of paying high interest will not increase. Okay, and उसके अलावा भी एक और चीज है, like inflation, current inflation that is happening in 2022 is a global phenomenon. So as and when US increase their interest rate, suddenly India का सारा पैसा US terms में निकाल कर they will invest in US bond market, because yield to maturity for bonds also increase with the increase in interest rate. वो अलग ही टॉपिक है, we can discuss that in some other video. But hope you understood the second phase, where interest rate is increased by the central bank, and thereby the margins are further affected by companies who are very capital intensive. Okay, and the third and ultimate phase, when the stock market will start to recover, is when this prices of increased raw material cools down. Okay, then the margins of companies will also increase. If cost of production goes down because commodities, the raw material prices have gone down, then the margins of the companies will also start to increase again. And in such a situation, if the margins of the company start to increase again, then again obviously the money is going to be poured back in the stock market, because share price is nothing but the function of future earnings. And if future earnings are going to increase, or the margins are going to increase, then people will start to again invest in the companies, and this is when the stock market goes up again. Okay, don't be fooled that decrease in raw material prices is going to be passed on to the consumers by decreasing the sale price immediately. That doesn't happen immediately. It is going to take some time, because again there's company A and company B. If company A reduces the prices, then only people are going to buy from company A. But that will not happen immediately, because everybody wants to make money or make more profit. Ultimately, when a big player decides to cut down the cost or the sales price, then, or there is an increase in local competition which are selling the product in low cost or low sales price, then the sales price of the commodities or the final product decreases and it is passed on to the consumer. But during this phase, the margins of the company flourish, because demand is going to be coming back because of the decrease in raw material prices, and the margins of the company is going to flourish. This is when the stock market takes off. So this, hope you understood the three phases of an economy and how it is affected by the inflation. And once this phase, third phase comes back, then you can always say,
Sab Changasi.
I hope this video was helpful for you guys to understand what is the impact of increased inflation in an economy on the stock market, and why does the stock market go down when there is an increase in inflation, and as and when the inflation cools down, why the stock market goes up. Hopefully it brings more clarity to you in making your investment decision. And I also take some value-added investment courses, the link to which is provided in the description. As always, don't forget to like, share and subscribe.